Yeah.
Coincidence.
Yeah.
Coincidence.
Yeah.
Coincidence.
Something that happens by chance, I think not.
Sunday morning. Hello and welcome on this beautiful Sunday morning to Save Me Expand. My whole life I've been working with money, working on yields. I'm currently a quantity surveyor. Before that I was a real estate agent, working for property management and development. Over the last couple of years I started getting into stocks, buying and trading, putting money into funds, thinking about my future. Back in June I was featured in an article by Reuters, which you can read in the bio link. I have actively been day trading, swing trading and long-term trading for the best part of a year now. And thankfully I've had good success. And that's why I've started this YouTube channel. Without further ado, let's get to today's topic. Cathie Woods sells Tesla to buy Alibaba. I'm going to do an overview of who Cathie Woods is, what Ark Investment is, why she sold Tesla, why she's buying the dip in Alibaba, and what my position is. Don't forget, if you do like this channel, please subscribe and like the video. Leave any comments at all, anything that can help me improve.
For those who don't know who Cathie Woods is, she is the CEO, founder of Ark Investment Management. Cathie Woods knows exactly what she is talking about. So when she makes decisions on stocks, people listen. And I tell you what, Cathie, I'm listening. Ark Invest actively manages 5 ETFs. Focus on disruptive innovation. Ark Innovation ETF, if we go to the top 10 holdings, you will see nearly 10% in Tesla, with some of the biggest growth potential stock plays that currently make up the top 10. Breaking news last week was that Ark Invest sold 1.85% of their Tesla stock, roughly around $12 million, 26,000 shares.
So why has she done this? Well, Tesla's had over 400% rise in the last year. So for me, I think she's just being shrewd by taking some profits. £12 million worth of profits, alright? So it's not too bad by Cathie Woods at all. And she's reinvesting this money in Alibaba, which has had a couple of dips over the last week. Two reasons in particular.
First of all, Ant-IPO. The Ant-IPO was suspended. Breaking news, less than 48 hours before the largest IPO in history was due to go. What happened? Apparently Ant Group may not be fulfilling the listing requirements. As a result of the IPO being halted, shares were down 8% last Tuesday, as Alibaba owned over 30% of Ant Group.
This news really hurt the share price of Alibaba, with the shares opening 8% down on Tuesday. Cathie Woods smelled that bargain.
She loaded up Ark Fintech Innovation ETF with nearly 10,000 shares. She loaded Ark Next Generation ETF with nearly 30,000 shares.
To quote Mr. Buffett himself, Cathie Woods is being greedy while others are being fearful. However, is this 8% a sign of things to come?
Initial reports, according to the Financial Times, are mixed. It has been quoted that this could be possibly a delay of up to 2 years, while others are being less cautious and predicting it could only be 6 months. But either way, there is uncertain times when it comes to the Ant IPO.
But I'm not too worried, because in my experience, money makes money. The best people will be working to understand the new regulations to be able to put this IPO into play as soon as possible. And I would be absolutely stunned that within the next 12 months, this IPO isn't live. Following Tuesday's disappointing IPO news, and after an 8% dip, it was only going to get worse for Alibaba. On Thursday's earnings came out, they opened up down 8%.
The company reported an adjusted income of $2.65 per share on a revenue of $22.8 billion. However, Wall Street expected Alibaba's earnings of $2.12 per share on revenue of $23.2 billion.
It's a funny old thing, the stock market. In my opinion, Alibaba's recent earnings were fantastic. Bear in mind, this is a global pandemic and this company is shattering records. But it didn't meet Wall Street's expectations, which provided me with an opportunity to buy the dip. Alibaba, 8% down. Baby, let's go. The reason I don't have Alibaba on my portfolio already is because of Donald Trump. Wild accusations over the last year has really hurt the share prices of many Chinese stocks, and I've had to sell my positions in NIO and Alibaba because of this. Currently the presidential election is underway, with Biden currently winning and Donald Trump looks set to get fucked out of the White House. Happy bloody days. What this means for me is that I can open up my positions back in these Chinese stocks in NIO and especially Alibaba. I've been watching them carefully, and to be able to get in at the dip at this current time is brilliant. What an opportunity. An update, while I was editing this video, the final results came in. Donald Trump has been beaten. He is no longer in the White House, and all my previous points are even more valid. I am going balls deep in Alibaba.
For those who live under a rock and don't know Alibaba Group Holding, here is some of the forecast on CNN Business's website. The stock price forecast, as you can see here, show plenty of room for movement. 56 of the analysts have recommended Alibaba as a buy stock. As you can see, I've opened my position in Alibaba. I got them at a price of $285.50 and they currently sit just shy of $300 a share.
As you can see, rebuying back into Alibaba on Thursday at the dips, I caught it sweet as a nut. I am delighted to be buying back into Alibaba, and if there is any more dips for any of the reasons that I previously mentioned, I will be buying them. In some ways I hope that there is more dips and a bit more uncertainty with the whole anti-PO, and maybe even with the presidential election, and let's not forget the coronavirus. I will be buying the dips. I see myself having maybe 10% of my portfolio filled with Alibaba stock. Well guys, that's the end of the video. I hope you enjoyed it and found it informative. I'm looking forward to seeing where Alibaba goes. If there's any comments, any feedback, please feel free to leave me some. Don't forget to subscribe, like the video, plenty more content coming. The only way is up, baby. Let's go. If you're thinking about getting into stocks, why not click the link in the bio, which brings you to my broker 212, where both of us will get a free stock.
Coincidence.
Yeah,
Coincidence.
something that happens by chance, I think not.